Hello guys. So in this video we are going to discuss the fundamental analysis when we are doing when we are planning to do the investment. Okay. So the fundamental analysis here means that what all the things, what all the components we should include if we are going to take a decision regarding the investment. That what decision we will take, that whether is this a time, correct time or a right time to do the investment or not? Is this a right time to just put our savings in the market or not? Okay. So when we do the fundamental analysis, so we will call it as a EIC analysis. EIC analysis here means the components of this EIC analysis is your economic, economic, industry, and the company. Okay, when we are going to do the investment, so first we should check that what is the condition of our economy. Okay, after checking that condition, we should check that in what kind of uh, company we are going to do the investment. Okay, what is that industry? That company from which industry is it belongs to? Then we will do the study on that particular company on which we are going to put our money. Okay, so this is a EIC analysis. Basically, these all are the components: that economic analysis, industry analysis, and the company analysis. So when we are doing it in the economic analysis, some factors are there. Apart from it, also some factors are there which can impact your investment decision. Okay, that if the condition is good, so it is good to have the investment or do the investment. Otherwise, we should just for that time being, we should delay. Okay, so what all the factors are there? Very first is the saving and the investment. Whether this time is there to do saving and the investments or not. Okay, if the economy is in a boom period, okay, that whatever the share prices and all are there, that all are going very high, the returns and all we are getting very high. Okay, so in that all cases, this will be very good. That what is your saving? The economic analysis very first is there ki whether you have savings to do or not. Okay, if you have a saving, then what kind of investment you are going to do? So these kind of analysis will come under the economic analysis. Then next is the industry growth. What in the economy, what the industries are there? In what kind of industry you want to go? You want to put a money. Okay, so that what is the growth rate of that industry? Okay, just say example in the COVID period, no any industry was doing very well apart from one, that was the pharmaceutical industry. Okay, everybody was in need of that injection, everybody was in need of that medicines and all of that pharmaceutical company. So we have to see that what is the growth rate of that particular kind of the industry. Okay, uh, if we are seeing now, so the government is putting more and more effort on uh, the green environment. Okay, that we have to see. Just with our development, we have to see the environment also. For that, they are uh, just initiating or giving more and more advantage to the uh, electrical vehicles and all. Okay, and the vehicles which is going to which is running on the batteries. And so where the growth rate is, what is the growth rate of each and every kind of the industry? So as the industries are coming in the economy, so we have to do the study of the same. Then agriculture and the monsoon, that also depends that what is our economic condition. Okay, that what kind of agriculture this year has happened, what kind of monsoon was there. If the agriculture is very good, then in that case government need not to pay the interest rates and all of the farmers. Okay, so in that case they can put that money in some infrastructural development and all, where there will be a growth of the economy. Okay, so more and more returns you are going to get anywhere. If these agricultural condition is not good, so most of the amount of the government used to go to this agricultural sector. Okay, to just pay off their interest, to just pay off for the grains and pesticides and also many things are there. So it also depends that what kind of condition you have that will be affected by the agriculture or the monsoons. Then next is your government budget will be deficit. Okay, what the budget the government have and if any deficits that government have. Deficits here means what the income they have more and more of expense as compared to their income. So in that case, as more and more deficits are there, the economic condition is not good at all. So in that case, we should not do the investments in that. Then demographic factors also are very important factor which play a very important role as more and more the population will be increasing or the gross domestic product or the gross national income that all will be very much affected. Okay, so I think you all have heard that every time the government used to say that if you are doing a kid, only two must be there, or one also could be there, but not more than that because we have to control our pollution. Sorry, population. Okay. Then next is the industry analysis. That at what stage the industry is. Okay. Basically, when we do the industry analysis, there is a full life cycle of the industry. Okay, where there are four stages. That is stage starts from the introduction, then goes through the expansion, then comes to at their maturity stage, and then it will start declining. Okay, so what is that introduction stage? That if any new company, if any new product has come, product line has come of any of the company. Okay, so that will be the introduction stage where they have just stepped up in the market. They don't know that whether this uh, company is going to do better or not. Okay, whether they are going to have their income sufficient income or not, so that they can afford what is likely to be. So that is the introduction stage where they are not knowing anything. It could be in this stage only, it could be a chance that company will wind up or company can grow up. Okay, so next stage will come either in the introduction stage whether they will be growing up or they will wind up. Okay, so if they are growing up, so there will be a stage of expansion. Expansion here means now more and more they are going to expand. If they were doing the sales volume in terms of the sales volume, in terms of the production, in terms of the adding up of new product lines and all. Okay, in all that cases they are going to expand. Okay, then after that there will be a maturity stage. Mature stage here means now you are at a stage where you are having a more and more of the income by your selling. Okay, your sales volume are very high. Okay, your production is very high. Everything is at a high level. Okay, that will be your mature period. And then the declining period will start. Where declining period here means that now if you are in that industry, so there could be a more and more of the competitors and all. So to compete with your competitors, you will start just reducing the price of your product. When you will start it, maybe you were new in that industry. Okay, so when the competitors also will come with the same kind of product, so you will start declining your price of the product. So in that case, you will come into the declining stage. So when we are going to do the investment, okay, when we are going to take a decision for investment, we have to check at what stage the industry is. Okay, it is good to go for the investment if they are at a expansion stage. Okay, because in introduction also we can do, but we should be sure that this company is going to run for a long period of time. Then only we should do investment in the introduction stage. If we are doing and if the company has grown after that, so you will have a very good rate of interest. Otherwise, it could be like your money will be going there if the company has wind up. Okay, so this is the full analysis that we should do in the industry. Now coming to the company analysis, basically some financial ratios. Now from the industry, you will come to any of the company. Okay. From economy, you will come to the industry. What kind of industry you want, whether it is a infrastructure, whether it is a pharmaceutical companies, whether it is a manufacturing companies, whether it is a service company, what kind of company you want. Okay, so that will come under the industry. Now, from that particular industry, you will choose what company to invest. So, when we are choosing any of the companies, so how we will analyze it? So, basically, from their annual report only, we used to analyze that what all the financial ratios are there of a company. Okay, how they are growing as per the earning per share, that per share what the earning they are giving each and every shareholders or member of their company. Okay, what is their price earning ratio? That whatever the investment they are doing, what the earnings they are getting from that, and so on. Okay, so basically this on the annual reports we can check the financial ratios. From there we can check their financial performance of the company, and accordingly we can take a decision that whether they are giving a good return on their equities, on their other investments or not. So these all are about our fundamental analysis for any of the investments. Okay. In the next class, we will do some other topics. Till then, thank you. Bye bye.